Hey everyone, hopefully you're having a good day. My name is Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll run through the dollar, yields, precious metals, and work our way through commodities and ETFs that I follow at least, and the ones that I like. You can sign up to the finding-value.com Platinum membership if you'd like. Join our community. Use the word discount in the coupon code. And we go over a lot of this stuff, a lot of the ratios. We go over a lot of companies that look very highly leveraged to the moves that I think that are coming. So let's dive in here. I'm going to give you my financial opinions around all this stuff and hopefully some correlations that you guys maybe have noticed or haven't noticed before. And I can talk about that. So here's the DXY. And again, the DXY is only a relative strength indicator of currencies. This is diving down still, and there is still a struggle between the buyers and sellers. You can see these large candlesticks in either direction going back and forth, socking it out against each other. I do think that we've got an overall trend of this and this going on, and it does look like we're starting to roll over in this kind of fashion in the DXY. And generally when this goes down, it ignites another fire to the commodity bull market because it gives a tailwind to commodities as they're priced in dollars. And the relative weakness in dollars gives you more reason to dump dollars and invest in emerging markets and commodities and other things that are non-dollar denominated. So weaker dollar today, down 0.54%. Although we've had stronger yields today. The 10-year yield's up to about 2.5%, which is pretty big. And we're on this support line, the blue line going across and the support white line going across here. We're on support. And is this going to bounce and move on up? If that is the case, where we get higher yields and an inverted yield curve, a more inverted yield curve, that is generally saying that the market is afraid of inflation. That's where oil does quite well, platinum does well, and it could be a little bit of a headwind to gold and silver. That's what I've seen in the short term here. So we had the 10-year yield was up 2.5%, and the 30-year yield was up 1.8%, and they're both doing basically return or retest moves from their breakouts. So there's the breakout here, and then there's the return move. So the curve inverted today, and I don't know, and this is the big question to get right, is the curve going to normalize where the markets slow down in front of us? Or are the markets still worried about inflation and the curve going to continue to invert? I don't know that answer, but it's the question I would like to have answered. And obviously nobody's going to know that answer, but that would be the one I'd want to know, because if you've got the 10-year yield that looks like we could potentially head higher, and this was the fear in the markets, and if that fear dissipates, and let's say structurally underneath the markets, inflation is still prevalent, we would see this yield curve continue to invert. If that's the case, gold and silver aren't going to like that. If the curve is going to uninvert where the 10-year yield drops faster than the 30-year yield, and the whole curve normalizes and drops at the same time, gold's going to take off like a bat out of you know what. So I'm watching that, and I'm trying to figure out what's going to happen here. I still think oil is set up quite well. That's my opinion there. TLT, which is bond prices, we're up against this resistance area, and it does look like it might want to fall. Bond prices falling conversely means that yields will probably go higher. If that's the case, the curve is probably going to invert more, and we still are game on for platinum and oil, which are highly not perfectly correlated, but they're highly correlated assets with inflation, more so than gold and silver. Look at the TYX TNX ratio. It does look like we could potentially reverse here and head lower with the curve inverting more, which means that TYX is going to go up at a faster pace than TNX. And although this looks really good and it's really low and we could go higher, in the short term, it looks like we could compress down further. Again, we're going to have more data. I don't know where it's going to eventually end up. I'm just giving you scenarios. If this goes higher, gold and silver rocket. And that could be a possibility. We're at this inflection point of like, which way are we going to go? If it's going to come back down, generally speaking, gold and silver does not work in that scenario. It does not like the curve inverting. Oil can go up either direction that this goes, so I'm not as keen on that. But if it does go down, oil is, I think, the better bet, along with platinum to some degree. We've got the CRB Index slightly higher today. We're coming down to that retest area against that trend line that I drew in here. And we'll see if what this thing does. It's highly correlated to oil and some of these other commodities. CRB to S&P 500, we've pulled back a bit, indicating that the S&P 500 could run here. And that very well could happen. And we're right on that trend line of the broken channel to the upside. A breakout and then a retest, perhaps. We've got gold. Is this a bloody nose where it continues higher? Or do we have a little bit of reversal candlestick? I'm inclined to say that this is going to move higher, and it's a continuation pattern. So that yield curve, we'll have to see what happens, and we'll have to see how much of a headwind that is to gold. Now, gold can break that relationship like it did in the 1970s. 1970s, we saw the curve invert more and gold go up. And that was a function of people being afraid of the currency itself. And that very well could transition into that at any point. Silver also getting that little bloody nose, which is a continuation pattern to the upside. I like the way this looks in this area here. This is obviously the downtrend. And what you can tell is downtrends have large selling pressure candlesticks, small up days. The trend reversed here, and we have large up candlesticks, small selling pressure days. So that trend looks to continue, and it looks good to move higher for silver in the short term until that trend changes. Platinum up today, 1.7%. We'll see if that continues. It's okay momentum, but we didn't really close at its highs. So we are getting a little bit of selling pressure in this general vicinity up here. XAU to gold ratio, this is very positive as we're seeing people position more so in the gold and silver mining companies. So they are outperforming gold itself today. Gold was down a little bit today, and the gold and silver miners were up. So that does look good, and that is a positive sign where we could see gold and silver hopefully start to move higher, the mining companies and gold and silver itself. So we'll get more data tomorrow and see how this thing is reacting. This is GDX moving up 1.73%. We have eclipsed this resistance line, which is good, and we can use it as support now. SILJ also up a little bit today, 0.96%. That is looking decent for SILJ there. There's kind of our resistance line that we still have to break through in the middle of this guy here. And we've got a lot of resistance in these kind of areas that we've traded lots of shares through. So we're going to have to get through all that. Crude oil, it was selling off in the morning. I know people were probably getting afraid, but this is a reversal candlestick. We are finding buying pressure all in this bottom here. You can see these tails that are being created on the bottom of the candlesticks. And what that means is the price comes down, people buy it back up. People buy it back up. They buy it back up. They buy it back up. So eventually what we're looking for is hopefully a turn and reversal here that we move higher. And this is actually a false breakout from the fear that was created in the banking system of liquidity. And I don't know if that fear is still there. Maybe it's worn off. Maybe it's still there and it's going to roll us down even further to the downside. That is a possibility, but we are finding buyers here. This is a reversal candlestick for us to move higher in crude oil. Natural gas still selling off a little bit, and more than likely, I'm going to bet that it's going to probably come back to the $2 level and do a retest of that level. And we'll probably bounce back and forth a couple of times in natural gas during the springtime. So that's what I'm expecting, and I do think that natural gas is at a pretty good level down here. So we could be seeing some of these companies start to put in bottoms at some point and try to reverse to the upside over the next, either from here to the next month or two. XOP, yeah, you know me, looking at the exploration production companies. This looks good to move higher. We've got a bullish engulfing a couple of trading days ago, and we're still holding on and moving sideways. So sideways to higher is what my estimation would be, given that the overall markets don't puke on themselves. But right now, it's looking like it's trying to find a spot here to try to move higher. Now, even if we move higher, we have to watch it because we might come back, do a retest, and head back lower. Or are we going to come up here and punch through? That is our factor. If we're going to try to move higher here, we want to punch through that resistance line that is this longer term resistance line here. It's not super long, but it's a little bit. We've got lots of support underneath this white line down to about $105. OIH also moving higher today, up 3%, and it does look a little bit better. This is a bullish piercing here, which basically slowed down the movement. That's the reversal candlestick here. And then hopefully we'll go sideways to slightly higher for the energy service companies. Energy service companies look pretty strong today, but we do have a lot of momentum getting sold off to the downside that's going to have to work its way out of. So you might need a little bit of patience here, but I do think watching it and seeing how this thing progresses and develops, because we could have some good buying opportunities show up in energy service. Sprott Physical Uranium Trust, looking a little bit better on the weeklies here, up 3.43%. We're getting some buying pressure. We're bounced off this support level. So the buyers did step in today, looking a lot better than what it was, and we'll see how it progresses from here. URNM basically flat or sideways. We could still bounce around here a little bit longer in URNM. I don't see the big buying pressure coming in. This is a reversal candlestick here, and this is a pretty weak bounce. So we could be bouncing around a little bit to work off this large momentum coming lower. It is still in the cards if there's selling pressure in the markets that this thing gaps and really pushes lower. That is a possibility. I'm not saying that's what I expect. I'm just telling you it's a possibility still, because the buyers, we don't see any buyers coming in, laying down some fat green candlesticks I call it the Green Army. TAN up 1.6%. Again, I'd like to see more buying pressure, a bottoming candlestick or something like that. There could still be a little bit more downside pressure, selling pressure in TAN in the short term. Long term, I like it very much. COPX, a lot more buying pressure today, up 3.44%. This is a bullish piercing pattern, and we're getting some momentum to the upside. So that's good there. And again, it does not mean that this is going to go straight higher. We very well could work our way on up, something on any one of those ways. But we have a short-term bottoming candlestick here, March 16th. Lithium also getting some good buying pressure. I do think this is going to work its way higher eventually. We've got a bullish engulfing here and another bullish candlestick today. Finished quite strong, momentum to the upside. REMX doing the same thing. Bullish piercing here where it could bottom and work its way on up. We do have a lot of downside momentum though. So keep in mind that it could work its way sideways for a while. The S&P 500 still holding in there. Nice little candlestick today, finishing strong to the upside. This still looks good for a move higher if it wants to engage in a move on up. And we're coming to basically this trend line. If it wants to break it, move, we could see a rally in it. Again, I'm going to remain open. I'm not saying it's going to rally. I'm just saying we could see a rally. And if we break through that downtrend line, it'd be a very nice, probably move higher. Because if you look at this is a broken downtrend, a retest. And if we break back above this guy at 41, whatever, that would be a new uptrend. So that is what we're looking for. NASDAQ's doing the same thing. We're right on support, in that general support area. We've got nice candlestick formation, or the way it looks, big green army, small red candlesticks. We have a trend line that it's trying to break, and then we want to break this guy here for a new uptrend. So let's just wait and see what it does. EEM, emerging markets, also firming up here. I actually like emerging markets right here. I think it looks like a really good entry point. in this general location. Weaker dollar is going to push this higher. And I think that commodities, if commodities start getting a little bit firmed up here, I think emerging markets could have a nice, good old run. And this is something that I do like to invest in. XHB, which is the home builders index, up 0.7%. If we were in a housing bubble, we would see the home builders start eating it, but they're not. They're not eating it. We're on support. We've got basically a double bottom pattern. We come up, and then generally you get stuck here for a little bit, and then we break and move on higher eventually. We had higher housing starts in America, which is a generator of inflation, and the home builders look really good. MU also moving a little bit higher. Again, this thing's been, it's more correlated with the overall markets than some of the other sectors and commodities, but it does look like it's trying to turn around here. We want to see if it comes up and turns back over, or if we're going to come up and break through it. That's what we're looking for. Copper also holding together quite strong. It's pretty well composed. It's above nice, good, strong support area there. And we're right on top of it. The candlesticks look good for a continued move higher. So copper still looking good, heading up higher today, finishing decently. And we'll see where this thing goes over the next week or two. Lumber down slightly. It looked like it was trying to run, but down a little bit. Again, broken downtrend, and we're still holding quite sideways to a sideways move. I still think it looks fine. Iron ore also just slowly working its way, grinding on higher, still looking great in a larger megaphone type pattern. We've got nickel moving up slightly higher today, up 1%. Let's go to the weeklies. There it is today, just a small little candlestick, and I bet you we'll hold roughly where we're at. Aluminum slightly higher. Going to the dailies here, we're just moving sideways, still looking all right. It's not moving anywhere up or down too quickly, so that's looking all right. Baltic Dry Index slightly lower. This thing's been on fire, though. To the upside, it has been. And I still think there's a lot of value in the Baltic Dry Index, although we could pull back a little bit as I see the weekly candlesticks. The opening and closing prices are basically coming where we might see a little bit of a pullback at some point in the future. Newcastle coal pulling on back still, and I think it's going to reach this area down here to do a retest, and that's where I'm going to become pretty bullish. I'm majorly bullish on natural gas. That's really the one I like, but coal would be good at some point here in the future as well. And then we've got downward, a little bit of downside in Ethereum. It's right at that resistance area that I so awesomely drew in by hand. Bitcoin's also small down day. That looks like a continuation pattern to the upside. Still looks really good for Bitcoin and that momentum. So that's what we've got for today, guys. I think that we could see some upside, moves depending on if the buyers want to show up. Crude oil looks like it's trying to put in some sort of bottom here. We've got the overall markets don't look too bad, so I don't think that's going to drag us down. At least if it breaks its little trend lines to the upside, and then hopefully it breaks and goes and moves to the upside. I want the overall markets to go up, and I want commodities to go up, and I want commodities to go up faster. But there are times where they link up and everything moves up together. Think of it as an inflationary period, bailout money being printed, more credit expansion from the real estate market, all that stuff kind of packaged together, where the money supply goes up, or the velocity of money increases, or the credit grows, the total bank credit. You can also have M2 money supply go down a little bit, depending on QT and some of this other stuff, and the money in the system can still be generating inflation. So that's also another thing that you can think about. But overall, yeah, it looks good, and we'll see what the buyers want to do here, buyers and sellers. And remember, when I talk about it looking good, it can look good for a move higher, but we're talking about short-term market movements. Short-term market movements can change in like 30 seconds. If news comes out and everybody gets scared or something happens, this can reverse very quickly. So short-term is always we're charting the emotions and the psychology of humans and the interactions that they're having under certain market conditions. Those market conditions can change rapidly in the short term, where people are trading based off of fear, based off of greed and emotion, and all those things. And that can change in a heartbeat. So the short term is the least reliable to be using. And that's why I do long term, more long term. Long term is measured in years versus, say, weeks or months. And that's why I chart that's charting the fundamentals and the structural fundamentals of the markets when you take the big picture view. And what I'm seeing in the big picture view is commodity outperformance, inflation, and precious metals doing well. Short term, though, anything can happen, and it can go in either direction very rapidly. But that's what I've got for today. And if you guys like the content, give me a thumbs up, subscribe to the channel, subscribe to the website if you'd like, the Platinum membership, and we'll catch you guys next time. This is Finding Value.